Hi, everybody. Welcome to Christensen Wealth Management. I'm Michael Christensen. Thanks for taking time out of your day to watch this weekly market update for the week ending Friday, January 19th, 2018. Before I jump into the Dow, S&P, and NASDAQ charts, I will go ahead and read the quote of the week from Eric Jensen. And if you don't know who Eric Jensen is a former teacher with a real love of learning. He has taught at all levels, from elementary school through university, and he is currently completing his doctorate in human development. In 1981, Jensen co-founded the United States' first and largest brain-compatible learning program, now with more than 50,000 graduates. So Eric Jensen once said, "There are no unmotivated people, only unchallenging goals. Make your goals believable and exciting." Wise words from Eric Jensen. Okay, well, before I jump into those stock charts, I want to say that the beginning of 2018 has been unlike maybe any other. I have been listening to seasoned veterans of this stock market profession that go back decades, and all of them are saying that we currently are experiencing something that has never happened before. So we need to remain cautious, vigilant, and just keep a close eye on these charts. But as of right now, everything is looking hotter than an iron skillet on the campfire. So we'll just go through them one at a time. Not much has changed in the last week. Everything has just gotten more and more extreme. But let's go ahead and take a look at the Dow Jones chart. Here we have the 6-month chart of the Dow Jones Industrial Average. Not much has changed over the last week, except we're getting higher and higher and higher here. The Dow has gone from moving like 50 points a day to moving in 300-point increments. So not sure where we are going to go, but one thing's for certain, and that is parabolic moves, which may be currently in the process of being set up here, usually don't end for the investor pretty well. So if you zoom all the way out, you can see that the rate of increase from here up to here is getting faster and faster and faster. And we're starting to get to the point where we're almost going vertical. So we need to be very vigilant here and keeping an eye on this thing, because parabolic moves usually unwind themselves very rapidly to the downside. So for now, everything looks great. The 5-day moving average on this Dow Jones is pointing, steeply up and pulling away from the 20. So we have short-term strength, and then the 20-day moving average in blue is well above the 50-day moving average in purple, moving away from each other as well. So we have intermediate term strength on those two indicators for the Dow Jones. Here's the 6-month chart of the S&P 500. As you can see, it looks pretty much the same as the Dow Jones. So much of the same commentary applies. The red 5-day moving average is well above and pulling away from the 20. And the 20 is well above and pulling away from the 50. So short-term strength and intermediate-term strength on the S&P 500. And again, if I zoom out, you can see that the S&P 500 is starting to move in a parabolic fashion. So we've entered what may be a very speculative phase of the stock market life cycle here. So I'll just keep an eye on it for you, though. Here is the 6-month chart of the NASDAQ 100, and again, extremely bullish, extremely strong. 5-day moving average in red, up and above, pulling away from the 20, and the 20s above and pulling away from the 50. So short and intermediate term strength for the NASDAQ 100, except starting on December 29th here, the NASDAQ loaded up, which is loaded up with lots of technology companies, has just exploded to the upside, and as of right now, that price in black is pulling away from the 5-day moving average. So extremely strong on the NASDAQ 100, and if I pull out a little bit, let's see if we're going parabolic a little bit, it's almost a little more linear, but still, if this continues, we're basically starting to point straight up, and that's getting a little odd as far as market behavior goes. Moving on to our industry charts, we start off with the telecommunications services, and since last week, the telecommunications has pretty much just leveled off. This bottom right here was on January 10th, so yeah, no movement in the telecommunications, just sideways action. But the 5-day moving average is still well below the 20, showing short-term weakness. And that 20-day moving average, that's kind of interesting here. The 20-day moving average in blue has, for the moment, formed a top. It peaked back here on about the 10th of January, and then now the 20-day moving average is starting to slowly roll over to the downside. So still strength on the intermediate term time frame, but caution is warranted since that 20-day moving average has topped. Here's the 6-month chart of the S&P 500 Materials Stock Index. Similar to last week, we've pretty much just gone sideways. We popped up briefly and then popped right back down, and the price, which is that black line, is sitting right on the red 5-day moving average. So no new developments here with materials. Still short-term strength because that 5-day moving average in red has not topped yet, and is still above the 20, and the 20 is still above the 50 and pulling away. So intermediate term strength as well for materials. Here's the 6-month chart of the S&P 500 Information Technology Index. One of the technology, as I said, is one of the big drivers of the NASDAQ 100, and so you can see, just like the NASDAQ, we had a short-term bottom here December 29th, and then boom, technology goes shooting up for 2 weeks and hasn't even begun to look back yet. So we got the 5-day moving average in red pulling away from the 20 in blue, indicating short-term strength, and then the 20 is pulling away from the 50, indicating intermediate term strength for technology stock index. Here is the S&P 500 Consumer Staples Stock Index. And a week ago in my video, we were about here, and it had been going sideways for several weeks, about a month or so. Well, as of today, as of this recording, which happens to be on January 17th, looks like Consumer Staples has broken out above this high, and this high. So that's a good sign for Consumer Staples. And the 5-day moving average is touching the 20 and starting to move upward again. So if Consumer Staples has another good day on the 18th and the 19th, then that 5-day moving average will be back above the 20. We'll have short-term strength again. As of right now, it's still indecisive since those two moving averages are touching. But the blue 20-day moving average is above the 50, giving us short-term strength. Here is the S&P 500 Industrials Stock Index. A week ago, I said it was extremely bullish, and things have not changed. 1 week ago, we were about right in here, a long run that began on November 15th, and then boom, up it goes and up it goes. Had a short-term top here on January 12th. Took a break for a day, and then boom, back up again on the 17th. So we'll just have to keep an eye on this thing, but the industrials look incredibly strong, and that 5-day moving average in red is pulling away and well above the 20, showing intermediate short-term strength, and then that 20 is pulling away from the 50, giving us intermediate term strength as well for industrials. Here is the S&P 500 Utilities Stock Index, and we have had a 1-day bounce in utilities, but a week ago we were right there, and for most of the week of January 19th it's been down, and then we had a bounce on the 17th here. So we'll see where we go on the rest of the week, but utilities still looks extremely weak and very unappealing. That 5-day moving average in red hasn't even bottomed. It's still steeply pointing to the downside and well below the 20, showing intermediate term weakness, and then that 20 is well below the 50, showing intermediate term weakness, and short term weakness was the prior one. If I zoom out here, let's see if there's anything educational we can see from this utility situation. And the only thing I can really gather is that if you drew a line from the low down here on the December 2013, and you drew it up to here, that would mean that looks like we've potentially we've got a ways to go if this does in fact come undone. We're sitting right here, and it might come all the way down to there, but the other support line that I was looking at was if you connect this bottom with this right here, if you want to be picky and just kind of go right there, then those are the two lines of support for this utilities stock index. And if I zoom in and look at them, you can see that on the 16th, either the 12th or the 16th of January, we broke below that support that goes all the way back to 2015, and on January 17th we bounced up and tagged it from underneath. If that utilities stock index doesn't get back above there, then I would guess that it might actually just keep going all the way down to this lower line. So lots of caution to be needed in the utilities stock index. Here's the S&P 500 Consumer Discretionary Stock Index, also sometimes referred to as cyclicals. And I think this one is pretty much the best one of all of them. I mean, look at this thing. It's just going like a I don't know, a rocket, just going, cruising along and getting steeper and steeper, like an airplane taking off and then going vertical. Just like the Dow and the S&P chart, a parabolic moves to the upside where you have an ever-increasing rate of ascension definitely is a potentially dangerous situation, because a parabolic move will eventually start to go vertical, and then once all the buyers are gone, then the only thing that can happen is a rapid unwinding of price to the downside. So we'll keep a close eye on this consumer discretionary, but you can't complain about how incredibly beautiful this chart is right now, with this 5-day moving average in red, up and above and pulling away from the 20, and the 20 pulling away from the 50. Everything is short-term strength and intermediate-term strength for the discretionary chart, but we just got to keep a close eye on it and see how long this trend continues. Here we have the Dow Jones Financials Stock Index, and you can see it's calmly just trending higher. We had this consolidation back here in December, and then we broke out of it on January 5th, and then it's been up and up and up and up all the way until the date of this chart, which is January 17th. So everything's looking really good for financials. We've got the 5-day moving average pulling away from the 20, showing short-term strength, and the 20 pulling away from the 50, showing intermediate-term strength. So everything's looking pretty good for this financial stock index here. Here's the chart of the S&P 500 Energy Stock Index, and we've had a really beautiful run ever since Thanksgiving down here, about starting on November 16th, but now it's trending rapidly higher. We had a little tick down here on the 16th, and not a whole lot of change on January 17th, but that data point is missing from this chart. But you can see the 5-day moving average is up and above and looking good above the 20, showing short-term strength, and that 20-day is rapidly pulling away from the 50-day moving average, showing intermediate-term strength for the energy stock index. In this chart, we have the S&P 500 Healthcare Stock Index, And it took a while for it to break out of its sideways movement. We had a high here on September 12th, and then a high here on October 20th, and then it just went sideways and tried to break it on December 13th and December 15th, and then on January 3rd, it finally broke above those two highs that we had before, or multiple highs, and it's just been taken off nicely here to the upside. The price is rapidly ascending, and you can see that the 5-day moving average is pulling away from the 20, and there's a lot of room between the two, so very good short-term strength and very good intermediate-term strength here as the 20 is pulling away from that 50-day moving average. Here is the Dow Jones Real Estate Stock Index, and these are companies that own real estate. A week ago in my prior video, I mentioned that utilities and real estate were extremely weak, and not a lot has changed except for the fact that we had a decent couple days here. Nice day up on January 16th and then 17th. So we got a little bit of a bounce, and the price in black here has recovered above that 5-day moving average, but the 5-day moving average is still pointing steeply down, and the 20-day moving average as well is descending steeply to the downside. So we still have extreme weakness on the short-term and intermediate-term time frames for the real estate stock index. Here is one last chart before I finish up. The US dollar index, and some of you may find this interesting since we're Americans and we all have dollars. But over the last 12 months, the dollar has been rapidly losing its value against the other world reserve currencies. In fact, back here on December 2016, we hit a high around 103.32, and over the last 12 and a half months, the dollar has gone from 103 all the way down to 90. So it's lost over 10% of its value compared to the euro and the yen and the yuan and some of the other world currencies. But something really noteworthy happened the other day. You can see this low in the value of the dollar on September 8th. Well, look what happened last week. So on January 12th, we broke below this September low here. But not only that, if I zoom out for you here and we see where the dollar has gone over the last many years, you can see that starting in about July of 2014, the Federal Reserve stopped generating so much free cash out of nowhere, basically stimulating the economy by printing money. The dollar, because the Fed slowed down and stopped its monetary stimulus, the value of the dollar just took off like a rocket from this point here about June 2014 all the way up here to March of 2015, and then it's kind of gone sideways. So if you look here, last week we broke below this September low here, and we had already, September had taken out this April 2016 low. Now there's really not a lot of support going down for the dollar here. It's pretty much empty space. But if I zoom out just a little farther, you can see that back here many years ago in 2009 and in 2010, and this one right here, 2008. So these three highs here are really the next level of support for this dollar. So we'll just kind of have to wait and see what it does, but it looks like the dollar is going to slowly crawl its way downward until it gets to about this level of 88.4 to 88.7, somewhere in that 88 range, 88 to 89. And we're currently sitting here right now at 90.65. So we'll just have to wait and see. But as that dollar falls, it's going to make many of the things that we buy every day more expensive. And if you travel overseas, well, that's going to get a lot more expensive. So thought that might be of interest to you since we're Americans with dollars in our pockets and our bank accounts. The dollar is looking pretty weak right now, and we'll just have to wait and see where it goes throughout 2018. Thanks again for watching this market update. I appreciate the time you took out of your day. I hope these charts were useful. As you can see, pretty much everything is just going higher and higher and higher, in not in baby steps, but in leaps and bounds. So I'll keep an eye on these charts and update you if needed, but as long as things keep trending the way they are, I'll be back in 7 days. But before you go, please take a moment to subscribe to this YouTube channel and click on the subscribe icon and then the little bell next to it so you'll be notified of all future videos when I post them. And if you use Facebook, LinkedIn, or Twitter, please look up Christensen Wealth Management on those social media sites and like or follow that page so that I can communicate with you better throughout the week when I'm not making videos by posting stuff on social media. Have a great day, and I look forward to talking to you soon. Bye-bye.